Please like, share and subscribe my channel, as it takes lots of support from you and effort to come up with a video. If you want to have more of the MEO Class 1 and MEO Class 2 related question, please mention it in the comment section below. Marine Insurance Question 1. What is P&I Clubs? Describe how P&I collect fund from shipowners. B. What are the risks that are covered under the term protection and indemnity? Advantage of having a known P&I Club in India? A P&I Club is a mutual insurance association that provides risk pooling, information and representation for its members. Originally, P&I Club members were typically shipowners, ship operators or demise charterers, but more recently freight forwarders and warehouse operators have been able to join. It is governed by a board of directors, a committee elected. It has managers for underwriting and claims sections and has correspondents, lawyers and surveyors at various ports of the world. The international group of P&I Club, based at Peak House, London, comprises 13 clubs, which provide P&I liability cover for approximately 90% of the world's ocean-going tonnage. Protection and indemnity insurance cover. The word protection simply means that the insurance also covers assistance when a ship is involved in an accident and the shipowner and his master need help. Often the club's early intervention and assistance will help to head off problems and serve to protect the shipowner from inflated claims. P&I insurance is an indemnity type of insurance, which means the shipowner, a member of the club, must demonstrate his loss before the club will pay out or indemnify him under the terms of the insurance policy. It is important to bear in mind that the club never assumes the owner's liability, therefore technically the owner, or member, is always responsible for payments, the pay-to-be-paid principle. In practice, the club often takes over the handling of claims and ensures that the claim is properly negotiated, settled and paid. Crew. Personal injury to or loss of life of stevedores. Personal injury to or illness or loss of life of passengers and others. Loss of personal effects. Diversion expenses. The shipowner may suffer losses through having to divert his ship in order to obtain treatment for an injured or sick person on board or for the purpose of landing stowaways. Although there is no liability here in the usual sense, the clubs give cover to the shipowner in respect of the basic running expenses of his ship during the diversion, including port charges incurred solely for this purpose. Life salvage. A shipowner may become obliged to pay a life salvage award to a person who has saved or attempted to save the life of persons on board the salvaged vessel. 1/4 collision liability. The hull policy usually requires the ship's hull underwriter to pay 3/4 only of the liability of the insured ship in respect of loss or damage to another ship or her cargo. As a result of the collision, the remaining 1/4 of such liability is insured by the shipowner's club. Oil pollution. Standard oil pollution cover. For CLC and bunker. Oil pollution cover for USA. Separate cover has to be taken for actual or threatened oil pollution arising out of an incident to which the U.S. Oil Pollution Act 1990, OPA 90, and COF, Certificate of Financial Responsibility, requirements is applicable. Additional premium has to be paid for this additional cover. Wreck liabilities. The clubs give cover for the liability which a shipowner may incur in respect of the raising, removal, destruction, lighting or marking of the wreck of his ship. Cargo liabilities. The member's liability for cargo loss, shortage, damage or delay occurring in relation to the carriage of cargo on the entered vessel. Unrecoverable portion of general average. Certain expenses of salvage. Award under Scopic Clause and under Article 14. Fines. A variety of fines may have to be paid by a shipowner, either directly or because of an obligation to reimburse his seagoing employees in respect of fines levied on them. Most of these come within the cover of the clubs. Legal costs. The clubs also pay for legal costs and similar expenses which a shipowner may incur in dealing with a liability insured by his club. In practice, the defense to the claim against the shipowner is usually conducted by his club's managers or correspondents, who engage any lawyers, surveyors, and other experts who may be required and have them paid directly by the club. Omnibus cover. In recognition of the fact that the list of liabilities to which shipowners are subject is constantly increasing in unforeseen ways, the rules of the clubs give their directors discretion to pass for payment certain claims that are not expressly covered by any of the heads of cover set out in their rules, provided only that they are within the general scope of the club cover and are not expressly excluded elsewhere within the rules. Policy year. A year from noon GMT on 20th February to immediately prior to noon GMT on the next following 20th February. Important exclusions. Loss of or damage to own property. Contractual liabilities unless approved by the club. Salvage operations conducted by the entered ship. War risks. Members' intent or gross negligence. Nuclear risks, chemical and biological warfare. Loss of time and freight. Unless freight forms part of cargo insurance, it's excluded. Contraband, unlawful trading and sanctions. Discharge outside destination. Failure to arrive, late arrival and failure to load. How P&I clubs collect funds. P&I club member instead pays a call. This is a sum of money that is put into the club's pool, a kind of kitty. If, at the end of the year, there are still funds in the pool, each member will pay a reduced call the following year. But if the club has made a major payout, say, after an all spillage, club members will immediately have to pay a further call to replenish the pool. Unlike the commercial insurance facilities, the clubs also invest heavily in training, education, and loss prevention initiatives in benefit of their membership. The premiums determined by the association and payable by the member may include the following. Estimated total calls, etc., means the whole of the budgeted premium for the year may be payable in quarterly installments. Additional supplementary calls later in the year. If claims have been heavier than expected, the managers will ask members for a supplementary call to balance the books. Clubs aim to be accurate in their predictions of future claims so as not to burden owners with supplementary calls. Overspill calls. One or more overspill calls in respect of an overspill claim. An overspill claim is a claim on P&I clubs which are parties to the pooling agreement that exceeds or may exceed the group reinsurance limit. Release calls. When an entry is terminated or shall cease, the association may, without awaiting the fixing any supplementary calls, determine an additional premium for each open policy year based on, but not limited to, the anticipated rates of supplementary calls for each year. Upon payment of such release calls, the member shall be released from all liabilities for further supplementary calls in respect of the said entry and shall under no circumstances be entitled to participate in the distribution of any surplus decided upon thereafter. Advantage of having a P&I club in India. The Europe-based P&I clubs refused to provide insurance to tankers carrying Iranian oil to India and denied India's request for exemption. Such a situation would not arise if India has a panel P&I of its own. Ship owners having smaller vessels like those operating on the coast could stand to benefit from an Indian P&I club. Moreover, most vessels involved in trade on the Indian coast were more than 25 years old and everybody would be sharing the risk and the losses will be less. Presently, shipowners have to take permission from government every 2 years to place P&I club cover outside India. That can be done away with. Boost for Indian insurance companies. Indian coastal and fishing vessels will be hugely supported. The contributions that shipowners make to P&I club will remain in India. P&I clubs are also involved in research work which can take place in India. Custom-made policy as per various seasons, local so will be vocal. Premium for individual owner will come down drastically.